Hey guys, I just wanted to jump in for a second and let you know a little bit about today's live stream sponsor, DNA Funded. DNA Funded has very generous profit sharing up to 90% and 3 different unique challenge types. For those looking to get funded, they also have speedy payouts, unlimited trading days on the first and second phase of their challenges, a very wide list of different things you can trade with over 800 different assets tradable, and maybe the most important component, a very experienced team behind the whole operation. So if you're interested in learning more about DNA Funded, click the link, check it out, see if it's right for you, and make sure to do your own due diligence to see if what they have to offer fits your trading style. For 20% off, you can use code A1T20. Again, that will be 20% off any of their challenges you'd like to check out. Thank you again to DNA Funded for sponsoring today's live stream. Now back to the show.
Hey guys, good morning. Welcome back to you. Good to have you here. Thanks for being here. My goodness, I've been overwhelmed with the really positive comments that I've been getting. A lot of people have been really, cheering on the gold trade, which is much appreciated. And somebody said Nick's going to buy a Ferrari with the gold trade. I'm not a big car person, and I understand a lot of people love cars, but ain't no way I'm going to take the profits of a gold trade and put it into a car. In my opinion, that is just, look, I'll show my privilege for a second. I come from a family that did really well. My dad was an entrepreneur. He did really well. It's one of the biggest advantages you could possibly have in life is having parents who are money savvy. And buying a fancy car, in my opinion, is probably the biggest way to blow your potential of generating generational wealth, unless you can buy 100 of them. Unless you can buy 100 Ferraris, ain't no point in buying a Ferrari. That's my personal opinion. I'm not a Lambo guy. I'm not a Tesla guy. I'm a buy a nice house for my family and children someday, and keep that money reinvested in the markets and compound it. Don't buy a stupid car. Personal opinion, hot take. I know it's not for everybody. Some people are like, hey, you know what? If I do really well, I'm going to buy myself a nice fancy car. And hey, you do you. But to me, I like trading too much to take like a chunk of my capital and just throw it into a car that I'll be interested in for 3 weeks and then not really care about. Personal opinion. What color is your Bugatti? It's pink. Anyways, let's talk about some market moves that we're seeing here. Gold continues to run. Unbelievable, just broke past $5,500 an ounce. And by the way, I'm not throwing shade on car people because I'm just not a car person, but a lot of people are, and I totally get it. I have weird interests and hobbies and things that I spend money on that people would probably be like, what the heck is wrong with you? So to each their own. I'm just not really a big person that's into cars. Yeah, you only live once, can't take it with you. Fair. I mean, if that's your, to me, I can leave it to my kids. I can leave it to a charity that I feel. That's also long-term goal. I have dreams of being like, this charity, and just picking them out with my wife at the end of my life. That would, to me, would be really cool. Anyways, let's talk about, like, that would just make me feel. Then you just feel like you like drop the mic, you're like, all right, help these people out. That to me is so cool. Nick, you married? Yes, I am. Yes, I am. I am married. Do you teach trading to your wife or kids? I don't have kids. And my wife, she doesn't really, she respects what I do in the markets, but she's not a trader herself, and I am totally cool with that. I think one trader in the house is perfectly fine enough. Anyways, let's talk some market moves. So today we have unemployment claims coming out. Yesterday we heard from the Fed, and there were some interesting remarks. There were some remarks that I think helped to bolster gold moving higher. It was a little bit of Powell staking his claim on Fed independence and the importance of it. Somebody asked him why he went to the Lisa Cook court case or whatever. He cited that Paul Volcker back in the day went to some notable Fed decision type court events. I actually tried to look that up. I wasn't familiar with what he was referencing. But anyways, I bought gold along with you and took profits of 4,500. Man, so people have been saying, Nick, why, or I would have taken profits over here. And the answer is me too. Like, there's been so many times where I'm like, all right, you know what? Let me cut it off. Enough's enough. I'm going to take profits. But I've chosen to stick with the strategy as much as I can. And what I mean by that is that there's an old expression that I really like, and it's dance with the one who brought you to the dance, or something of that nature. And the theory there is like, if something is working, show respect to the thing that's working. Trailing stops for me with gold has been a pretty insane move. But to abandon ship on that strategy doesn't make a whole lot of sense. That strategy has gotten me into this trade in the first place. The reason I'm in this gold position is because I've trailed stops and followed the macro. If I were to just take profits right here, and by the way, I was tempted over here to just be like, hey, you know what? It's a big number. I'm just going to take it off. But I think that would be a mistake. Not necessarily like, hey, you know what? Gold might come crashing down today and tomorrow. I get it. But I think it would be a mistake in terms of my trading career to just, all right, the number's gotten too big, I'm out. I think that most people would understand if I just took profits. If I was like, hey, the number has gotten ridiculous, I'm just going to get out of there, it's too much. I think a lot of people would understand that. But the strategy got me here. The strategy is going to take me out of here. That's my thought process on gold. And what that means, say a little prayer for me. Gold could keep going and I could keep trailing. And it could be in this trade for another 3 weeks. Who knows? Gold could start reversing hard from here, at which point I will close out. My new stop loss has been moved on gold to 52.21. I'm getting tighter with my stop losses. I will say that. Usually I'd wait for a bigger retracement than this, but these moves are so erratic, so wild, that I'm getting a little bit more loose with my, or a little bit more tight with my stop loss. That is my middle ground concession. Usually, like I trailed stops behind here. And it's kind of pushing it because that was barely anything, just a tiny consolidation. I did look at the 1 hour time frame. I don't usually do that. I looked at the 1 hour time frame. I said, okay, we based out. There was some clear buying that took place here. We broke through. I mean, it's clean to the upside. So if we come down to that area, I'd be fine holding the trade. But if we start breaking that, especially with just how the 4 hour and daily time frame look when you zoom out, I'm just going to call it good if it can't hold that support level. Now we're doing it again right now. So the question is, are we going to see the same insane kind of follow through today? I don't know. Again, I'm just along for the ride at this point. We're looking at the 1 hour time frame. Gold is ranging here. If we break through these lows, perfectly fine. I would give gold that chance on the 4 hour time frame to retest this consolidation. If that consolidation holds, great. I'm staying in the trade. If we break consolidation to the upside, let me draw that again. If we break consolidation to the upside with another really decisive thrust higher, stop loss is going here. And that's pretty much all I can say on gold. People have been asking me too. They've been saying, well, Nick, is there a chance to join this trade? Is it too late to join the trade? Can I rejoin the position? A lot of people took profits along the way. No fault to them. Again, I think this move is so ridiculously rare that it has, almost everyone has been frustrated by this move here recently. I think that's completely normal. If you're feeling frustrated with gold right now, you are not weird or in the minority of people who feel left out. You are part of most people right now who are feeling frustrated by gold. Right now, it just so happens that my strategy, my type of trading is loving gold. But there's plenty of times where I feel frustrated with gold because sometimes, I get taken out of a trade preemptively and then it reverses course on me, or sometimes I get stopped out just before it runs in my favor. Like, I know exactly how you feel right now. Right now, my strategy is doing really, really well with gold, but sometimes it doesn't do so hot. I'm saying that because I know there's a lot of people who are frustrated with gold. Can you give me, can I just get an honest feedback pulse check from the audience? If you are frustrated with gold at all for any reason, give me a 1. If you are riding gold long currently, or you are loving gold right now, give me a 2. Be honest with me. I just want to see what you guys like. I'm going to suspect a lot of normal people, and I don't say normal condescending in any way. I think like a lot of traders in general are going to be frustrated with this gold move because it's not giving very many pullbacks. For people who are reversal traders, this is HE double hockey sticks. If for the traders who are 2-to-1 traders, you may have caught some moves, but now you're like, the thing moved 14R, and I missed out on the big move, right? So I think a lot of people are frustrated, and that's completely normal. Okay. If you're fortunate enough to be in the 2 camp, if you're riding gold, then it's awesome. It's a rare move. And I want to show you guys just how rare of a move we are talking about. Look at this monthly time frame. You don't get moves like that ever in gold. Like, even in 2000, I guess maybe like 2005, 2006, into the great financial crisis, you had, let me do my logarithmic chart. Let's see. I guess over in this, great financial crisis period of time and back in the 1970s, but those are the only 2 comparable times in gold's history that I see. The 70s, right? The decade of 70s where gold went. I mean, and by the way, this is what gold can do. When it wants to make if it wants to do the thing, gold can go up for like this for a decade and then go nowhere for 2 decades or 3 decades. Gold is like, please understand this. Gold is not the stock market. The stock market trades really differently than gold. The stock market, typically, most major developed stock markets tend to do this over long stretches of time, right? They grind higher. Gold seems to do something more like this. It tends to do this, and then it does this, right? That seems to be more what gold does. Over long stretches of time, I'm talking about decades, right? Gold has a monster decade and then a quiet decade, or quiet couple decades. Monster up decade and then a dead decade. And stocks kind of do that. Like if we take a look at SPX, right, you can see it does also have periods of time, but it seems like more of the time you're getting this solid, grinding up trend. And then you are also having some periods of time which are consolidation, but it's almost like inverse to gold. Gold has these ridiculous periods, and then it has dead periods. This is part of the reason why I love trading gold. I absolutely love trading gold, but I also know that gold goes to sleep too. So I don't want to only be a gold trader, because if I'm only a gold trader, gold is great right now when it's trending like this. But what if we go into another decade of this chop? That's bye-bye strategy, right? That's a rough ride. Anyways, we just had unemployment claims come out. Let me just check this really quick. See what this is looking like. Unemployment claims came in 209K compared to 206K, completely as expected. So not really a big move expected there. Gold unchanged. Dollar pretty much unchanged. S&P 500 pretty much unchanged. So anyways, continuing on with this conversation about, gold and stocks and all that. So yeah, I'm pointing that out just to show you just how rare this type of price action that we've had in the last 1 year for gold is. It's very, very rare. Same with silver. Silver's pulling off a very, very rare moment. Look at the monthly time frame, right? Only couple times in its history have you had these types of moves. And this is the difference between a precious metal or, a commodity, but specifically precious metals, and the stock market. It's very different personalities. And commodities, commodities are just an interesting beast, because if you're trading them and you catch, if you're a trend follower and you catch a good commodities move, it's amazing. But for a lot of people, commodities are tricky because they can go from, if you're someone who, oh, by the way, look at oil. Oil's up 2.6% today, and copper's up 8%. Oh my goodness, something's going on. We'll have to check that out. We can bring in Chris Pulver here, who has now arrived at the station to take a look at some charts here this morning. Dollar index down a little bit. Volatility index up a little bit. Gold up 1.8. Silver's up 2%. U.S. oil 2.6. Copper 8%. What's up, Chris? Is this just the year of commodities?
I think this is the year that everything just sucks all the oxygen out of the market, except for what you're staring at every day. Gold, silver, copper, everything commodities. Like, these runs this is what everyone is literally talking about in 2026. My fiance's grandma, who's like 85 yesterday, asked me about silver. I'm like, oh boy.
Yeah, right.
I'm like, I'm not buying silver right now then.
Yeah, that's a fair. There's another Marco from the live streams here. He calls that the grandma indicator. Actually, funny enough, he said it was about crypto, really, but it kind of is prevalent for all markets. Yeah.
Yep. I think I pinged you that message. I'm like, I think this is just like sucking all the excitement and like all the movement out of the stock market. I mean, we're just treading water here in the stock market with a surprisingly low VIX. It's going to be interesting to see how the week finishes. I think that, Fed was pretty much a big nothing burger yesterday.
Yep.
I plotted out kind of the expected move for the day, and everything stayed in between. So that was fine. I mean, obviously we have more action today, tomorrow to finish up the month. We had some Mag 7 earnings that came out. Meta's way up and Microsoft is way down. So it's going to be a bit of a toss up. Yesterday, we had 64% of stocks declining in the S&P. I mean, Meta, look at this thing jumping, dude. This thing's up 70, almost $70. Almost an entire gap fill. I was looking at this trade up to 740, 745, and looking for that big gap fill. So anyway, that's Meta. Then you throw Microsoft in there, and this was ripping from the 438 lows all the way to 480 and just gave it all back in one earnings. And the earnings were positive. So what the heck, dude? And then you have Tesla.
Yeah, what was so bullish about Meta? Did you see anything?
Well, nothing was. I mean, I don't know what was bullish on it outside of. I just thought there was a lot of pre-earnings movement. I mean, like Microsoft was beat down prior to earnings, and I think it was just kind of being front run. But the fact that I don't know why it's down $30 outside of, this little pullback, beat earnings. I mean, I'll read a little bit more into their guidance here, but let's see here. Cloud segment saw 29% revenue rise, 39% increase in Azure. Segment grew by 16%. Let's see if they have anything else on. Falls despite earnings beat. Falls. Why did Morgan? Oh, I guess Morgan Stanley dropped it from a top pick list. I mean, whatever, dude. I just okay. I will buy Microsoft at low 400s if we come back and fill this gap. I'm just disappointed that I had a trade in that's either pinning price up here, which we were very close, and I needed this by Friday, or I was looking for price to be down at lows. So if we get some follow through, sure. But in an earnings play, when it's down for the week, up for the week, and then earnings drops in between, unless it's going to immediately drop more, I'm probably going to see like a toasted earnings where nothing really pays me.
Sure.
So it's an 8 to 1, 10 to 1. So I get it. Like, I'm sacrificing those trades, but we'll have to see some more thrust to the downside, or just a crazy aggressive rip, which I don't think either of those are really going to happen. So it is what it is. I've got earnings plays on Tesla, Microsoft, or another one on Microsoft, which is a calendar spread. That one's going to be questionable, just based on the expected move. Starbucks is doing pretty well.
Did you do anything with United Health Group?
No. Well, not yet. This one's already done and expired. I have no UNH in the portfolio. I do have some trades in on Humana, though. Humana is also down, kind of looking the same way that UNH looked last year.
Yep.
So we're trading at 190. You look left on this chart. Let me go to the weekly. So I have levels down here at 150. So I'm doing like 160 by 150. And I don't think we stay there. Also for these insurance companies, I mean, look, this one fundamentally, I mean, discounted cash flow has this thing at $1,000. Price to earnings 18, which is cheaper than most, like Progressive Insurance, Chubb. Although like Chubb was one of Warren Buffett's favorite insurance plays. I mean, their price to earnings is sub 20, but I mean, Snowflake wise, it's pretty good. I think this is just the overreaction to Medicare getting a price raise, which obviously insurance gets more expensive and it's disruptive. But I don't see this stock as like, oh, it's in trouble. I mean, I just want to stay out of the way, right? Stay out of the way. Don't catch a falling knife. But if we bottom out here, I mean, okay, gaps lower, pulls back. Gaps lower. I mean, there's some pretty strong support here. We're going back to, COVID lows. It's like, if I bought an insurance company with COVID lows, do I think they're going to be running out of cash in the next, 10 years? Probably not.
Yeah. I just sold, or not today, but a couple days ago or yesterday when we had the big drop in UNH.
Yeah,
I did sell puts on that one. So
nice.
I'm looking okay on that one. And here's the question, Chris, is like, I have this and I think it's up like 75% of the max profit
Credit.
How do you handle it? Let's say that happens. Do you just take that or what do you do with it? Are you?
Yeah. Well, do you want to own it or no?
I wouldn't mind owning it.
Okay.
But the question is, I guess it's tasty trade 101 stuff, right? If you go back to their theory, it's like, do you just take that and kind of roll into something new? Is that the better approach? Or do you try and capture that remaining 25% of max premium just sitting around waiting for a whole month? Because it's a 30-day out trade. I mean,
where's your strike?
250.
250. Let's look at the option chain. I'll just give you straight up. I mean, when I get to something like that, 75% of max credit is great. You're on UNH. Let's look at the option chain, and you're out to Feb
like
20
80 when it opens today.
Are you Feb 20 or Feb 27?
27.
27. And then you said 250.
250,
right?
Yeah.
Okay. It's trading at a 4 delta. So you have like a 96% chance that trade just holds. So what's left in it for you? I mean, your credit is
a couple $100. Okay. Maybe $100.
So you're saying if you hold it, you'll get an extra couple $100?
Yeah. Like if I hold it, yeah. If I stay short the put and it doesn't hit, then I'll probably gain another $150 or $100.
Okay.
It's not
here.
Much.
So this is just how my brain works with as far as a backup plan. If you were to see this thing drop below your strike to get assigned, do you think you could repair this within like a 30-day window?
I think I could.
So that would be the reason for me to be like, all right, I'll hang on to it. Because if it's not assigned, keep the full profit. If it is assigned, use a 30 to 45 to 60-day covered call, flip it for $500 to $1,000, and you're using capital. You're tying up capital. It's not cheap to have a $250 stock, but you tie that capital up, flip it for $1,000. It's just a quick return on that capital invested.
Well, here's your follow-up question with that, Chris, because I like where you're going with that. Okay, so I keep it open. Let's just say, do I then sell another put with that? Do I essentially step into margin or leverage a little bit by selling more puts?
No.
So you don't. So
I'll just cut you off there. Like when you said don't step into margin. Like just if you don't want it,
cash secured.
Yeah, keep it cash secured. Yep. If you're going to own it with cash, not margin. Yep. If you're going to repair it and hang on to it longer, do it with cash. So I tell traders this all the time. Like there's a difference between a cash secured put and a naked put. A naked put is you don't intend to own the stock. You don't want to own the stock. So what you do is you manage the stop loss based on that credit, right? So if you take the credit, I'll just say that you put in the put and it was $5. Well, if that $5 is trading out for $10, that's a 100% stop loss on that premium. So I typically, when I'm doing like naked puts, if I don't want the shares, I'll do a 200 to 300% stop loss, which means I would close out that $5 credit at like $15 or $20 debit. That's a manageable risk. That's a manageable loss. I learned my lesson. I don't cause myself any headache of tying up $25K on that assignment. But that's how I'd manage the premium side. If you want to own the shares, then let's say your break even would be $250 minus the $5 credit. You own it at $245. You have, this low is like $235, which is what I'm saying. If you feel like you're confident in repairing that thing, flip it for, $5 income, $10 income, take it and be done with it. Like I don't want to hold lots of stock in my portfolio. So if I'm willing to take an assignment on something like this, I want to be able to repair it and get rid of it within like 30 to 60 days.
I like it.
Yeah.
Yeah. I always think about that. I'm like, you know, because I'm the same way. You know, if I'm doing cash secured put, it's meant to be sort of a lower risk, lower beta to the market approach in general. That's kind of my theory with it. Where I know, however, some people kind of take on that approach of, you know, dipping into selling more cash secured put or more puts than cash is available in the account, knowing that, you know, most likely not everything is getting assigned, except for the rare instance where everything gets assigned at once, where you're stuck in a problem. So just something to think about.
Yep. And that did happen. So I did a lot of collar trades back in 2022. But all the like naked puts and stuff were definitely way more, they were flirted with a lot more than I wanted to see. Like I had a lot more like, oh crap. I mean, dude, Mag 7 drawdowns were like 40 to 70%. So even good stocks were getting assigned, and I'm like, I guess I'm going to hang on to this. And so the nice thing was a lot of them had like those reflexive rallies. And so I was able to repair and get out. But if I was hanging on long term, like you're sitting on those trades for, you know, 10 plus months until they recover, and basically until 2023 started to, you know, rip bullish. That's a long time to sit in a bunch of assigned stocks. So just be careful when you pick your winners like that. But that's why I say it's like plan A, you got your put. Plan B is if you get assigned, you can repair it or hold that thing. If I do have a naked put that I want the profit for, typically if I'm over 90% of that max credit, I'm okay letting that thing go, because it's not worth the extra. Hey, I'm going to hold this thing for another 30 days or 20 days or 60 days just to get extra, you know, $30, $20.
And I guess maybe another way of thinking about that too is like, hold it if you don't see any other opportunities. But if you see another opportunity come along that you like a lot, you're like, oh, I'm going to just cash this in. I'm going to free up that capital so I can sell something else somewhere else.
Very good point. So speaking of UNH, I actually, I just want to double check. I'm pretty sure I cleared my UNH positions, which I did. So I traded this. I mean, this is when, you know, the CEO was murdered and everything was dropping like it. I mean, I picked I think I did like the 200 by 190. And now I have the one, I'm looking at the 190 over here. So I'm going to do like either the same thing, either 200 by 190 again, or maybe even go 190 by 180. That actually looks pretty encouraging. Let's go to, and I wouldn't mind going a little bit longer on this one, but expect the move is here around like 185. I think I'm going to try to go like 190 by 180. And I mean, that's a pretty good trade, dude. If that's accurate, 190 by 180, I get $742 income plus $1,000 profit trap. So, I mean, probably the profit's 84%. I could probably move this down and say, well, give me $500. So I'll play around with this today, see where I can go here. If I can get like $500 on this trade, I'll see what these credits look like at opening bell. But I mean, a 170 by 160, I'd own the shares. 160 would be assignment minus 10 minus 518. Let's say that gets filled. I'd own shares of UNH at 144. I mean, look at that on the chart. Probability of that getting assigned at 144 is pretty low. We're going to be talking about a massive health or insurance company that's going to be 144. I mean, we have to be 77% off all-time highs. So, unless there is a major insurance reform out there that the government's planning on, which I don't think I don't know, who knows? Anything can freaking happen in 2026. But I don't think it's going to, I think it's still a solid play. But insurance is, I'm reading more and more about the insurance leaks or the insurance issues in the private equity space, not necessarily, you know, public insurance like Medicare, Medicaid.
No, we'll see how it all plays out. Chris, looking at the S&P 500 here yesterday, not a lot of move. I mean, you had the Powell stand. I've actually not seen Powell be, in my opinion, he was like the most closed to questions and discussion that I've ever seen him. I mean, really, he denied commenting on the US dollar, which I thought was kind of interesting. Would not comment on even mildly, it seemed like, very much about, you know, Fed independence or the circumstance happening there. So he was really closed off. Who can blame him? I mean, if you have the White House coming at you, like, I mean, I'm going to stay quiet too, for the most part. Like, I'm going to stay, you know, just to my script for now while I figure out what's going on in my world. Because, you know, for him, that's very real. So, it's kind of a crazy day yesterday. I felt like, I mean, crazy in the sense that nothing really happened.
It was a different Powell. And I look, I think that
Camera.
I think he did that exact like, no comment. I have no comment. No comment. It's like I think he did that because it gives very little fuel to the White House to be noisy. So if
Sure.
Trump wanted to say something on Truth Social, for what reason? He gave him no ammunition to say anything bad. It's like they're not doing anything. The dollar's weaker. Inflation is decreasing. It's like I just think he tried to make it as vanilla as possible. See if the market wanted to run with anything. If anything, while Powell is here for the next couple months as Fed chair, don't rock the boat, right? I mean, like labor markets are stabilizing according to them. Inflation's coming down. I mean, right now there's really no rate cut decisions until probably June to September, June to October, if we're gonna have 2 cuts this year, whoever that might be. Yeah, I mean, I think Powell just has like an extremely difficult spotlight to be in right now because it's just under massive scrutiny for no reason. It's just because Trump has basically shined a spotlight on him, and then he's just attacking him. This whole probe into the Fed, I think, is ridiculous. I really do. I don't know. Like the renovations and stuff, by the way, to the Fed building had nothing to do with Powell. This was happening well before. Like those plans are well before Powell. So anyway, I think just like everything else we talked about this year, it's a lot of noise. But the markets didn't really have any reaction, even with Mag 7. It's kind of hit and miss. What I don't like, and we've talked about this, is the VIX is only at 16. You have the S&P creeping up and literally poked all-time highs as of yesterday. So we were at all-time highs yesterday above 7,000. I don't know if it's just easier to keep going or if this market's going to have some reason. Like what we keep saying is like gold and silver are taking all of the attention out of the stock market. And I just think that something's going to surprise us, and something like 2026 will have something to talk about in a big way, maybe to like historic levels. And it could be a, gold, silver. I mean, Nick, I literally last night, and I feel like an idiot doing this. Last night, I was like, I think I'm just going to buy gold, and it's at all time. I'm like, why, dude? Like, just wait for a pull. Like, I can't bring myself to do it. But at the same time, I'm like, if this thing goes to, if this is GLD, we're already gapping like 2% higher. If this thing goes up to 600, I'm going to be mad to not just like take some of that. But at the same time, I know as soon as I have the impatience to do that, it's going to pull back. And it's like, I know that my risk most likely is more downside risk, which is what I'm trying to wait for and just get some pullbacks versus what I think I could maybe just jump on board with. And so even if I put like a couple $1,000 at it, I did the math. I'm like, well, if we had a 20% pullback, I'm down, $200 to $500. That's nothing. So I don't care about that. But also it's like, why would I buy it now? It's just driving me crazy that I'm not, it's stupid. I literally let go of a 4-year bull trade, and I feel like I'm just not participating, which I am. I've got, probably $50,000 wrapped up in gold and silver, but it's a fraction of what I had, for the last 3-4 years. So it's driving me crazy right now, man.
No, I completely understand it. I think this move in precious metals, I said this earlier before you were getting on. I asked the audience, I said, give me a 1. And hey, maybe if for people who are just tuning in, we can do this exercise again. If you are feeling frustrated by gold and silver, give me a 1 in the chat. If you are loving the move completely in gold and silver, give me a 2 in the chat. And at least earlier, there was a lot of 1s in the chat. I think it's completely normal. I personally am having a really good move in gold in my own trading, but it's just, hard to even put into words how unusual and rare this type of move in precious metals is. And I think it's fair to say that the vast majority of people, people are less likely to say that they're frustrated in their trading when you ask them to. So when we ask people to be really honest in the chat, share with us. Are you feeling frustrated? Are you feeling, thrilled with gold? And there's a lot of people who are very much frustrated with this move because the best strategy here, right? If we're just speaking objectively, was to buy it and not do a thing with it.
Right.
Really the best strategy, high risk, is to buy it with a bunch of leverage and just sit in it. But, us as active traders, we tend to do something with it. And that means, taking partials, scaling out, covered calls, whatever it is. And 95, 98% of the time, that's the right thing to do, is to find some way to scale out,
Wow.
to add some. And it's just unbelievably rare to have this kind of move.
Dude, we're over 30% away from the 200-day moving average.
It's insane.
No, I've never seen it before. It was 21 during the longest run we've seen during a great financial crisis. Like,
insane.
That's what I think. What worries me is like this is screaming like big picture problems, and the stock market is doing nothing. The bond market's doing nothing, and I think that's what I'm wrapping my head around, is like, how is that possible that this is screaming so many like problems with the entire system, and yet the market's like, what are you guys talking about? Everything's fine. And I don't want to be lulled into complacency. I feel like this market can really, really shock us with like, holy crap. I mean, I'm not going to say I didn't see it coming, but I just don't want to be surprised when we get some nasty turns, some nasty volatility. And I don't want to be, overexposed.
So Chris, this makes, I mean, exactly what you said right there. Let's think about this. This move in gold and silver is so ridiculous. It is just, I have used the word unbelievable to my wife, telling her about this gold move for like a month straight. She's probably tired of me saying the word unbelievable, because I'm like, it's just unbelievable. It just keeps going. It's
unbelievable.
Like unbelievable. And so anyways, I thought about this last night. I was thinking about this move being so unbelievable. And I started thinking about, well, hey, this can happen. This is probably what it felt like during the great financial crisis to the downside for the stock market. It probably felt this aggressive, this persistent, this jaw-dropping, but worse in the great financial crisis. Because down charts are way more devastating.
Oh yeah, that's way worse. It's like this is like a fun problem to have. Like, I can't believe, unbelievable what's happening. But if it's to the downside, you're like, I don't think unbelievable is the right word. I think like holy effing,
Yes. Like, what's happening? Like,
please stop. Please stop. Please stop.
Yeah. Yeah. So, and that just made me think, it is very, very rare for gold and silver to be making these moves, but these very, very rare events, like it's a weird thing to think about, but it's a ticking time bomb at all times for all charts to have these types of moves eventually. And, it does make me think, like, for so long when we looked at silver, Chris, you and I talked about it over here. It was like, what are we doing on silver? And you'd be like, I think silver's the better buy. And you were correct. But of course, nobody plays it perfect. And so when it does this, it's like, what the heck? You were right. But also, like, who knew it would do that?
Yeah.
And nobody thought silver was worth even talking about. People, dead money. I heard that.
Nobody was talking about it.
Nobody was talking about it. And if you brought it up, you sounded like an idiot. And then all of a sudden, we'd go from $2 moves in a week and be like, whoa, silver moved $2 to silver's moving $10 every day. Feels like it's just insane.
Well, and gold, I mean, looking at gold, it's gold like a 1 or 2% move. You're talking like $200 a day in spot price. Like it's nuts on gold. So a couple things I'm just going to kind of bring it back to some checkpoints in the stock market. Like gold, silver, they're on their own rocket ship to a new stratosphere. I do think at some point at 30% away from the EMA, at creeping up at 600 bars. Like you look in 30 to 60 days, I can still be saying unbelievable with you, or I can say I'm glad I waited, because we're about to find out. I mean, now that we've gotten through this first month, it's like Friday's the end of the month. We start a new month, February. If the stock market gives some volatility, the one weird thing is, like, does that mean that gold goes higher on stock market volatility, or does like the dollar have some big move, bonds have a big move? So what I want to bring your attention to is, so the move index, this is showing no signs of trouble. Credit spreads, no sign of trouble. Correlation in the stock market, no signs of trouble. 10-year yields, no sign of trouble. Stock market, send at all-time highs. We just broke 7,000. It's on, like, gold and silver are the things that are running in the background. Like, I can understand and wrap my head around okay, silver is AI. So this is where all the extra hype and mania is coming from. Gold is not that. Gold is not an AI play. Gold is like, holy shit, something's wrong with the global economy. The fiat system is doomed. Gold, 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 gold. That's what makes me nervous about what gold is doing. That being said, 30% away, I'm going to do this. I'm going to literally tie my hands. Well, not literally, but I'm going to sit on my hands. I can do that literally. And just not force a trade at these tops, as enticing as it is.
Yeah.
I have to at least wait for a 9 period, at least for a 21 period, at least something that is like where can I start at least getting my trades back into gold? Now, look, if we have another day like that, even if that's all it is, I'm not saying this is a good trade, but it's like, you know what? There's enough to put in $2,000.
And at
And if we
least
go
it's
down
better
again,
than where
another
it is.
$2,000. Yes, instead of like, oh, I bought it.
Yeah.
It's like, I don't want to feel like I'm being rewarded for literally buying the worst technical trade ever, which is buying the highs. Look, this isn't a stock that has momentum. This is a commodity that tends to V top, right? It's the opposite. Stocks V bottom, indexes V bottom, commodities V top. Because once they hit that exhaustion, they just give it all back. Look, if you don't believe us, look at, copper did it. I mean, heck, copper did it last year. Lumber's done it. Cocoa's done it. I mean, look at, copper, like you said, it's up 8% or something like that.
Unbelievable.
It's crazy right now. 9.4,
10%, 9.5.
Yeah. So, this was copper hit all-time highs, and it's just like double top down 20%. You go to, lumber, I don't even think I have the futures.
Yeah. Chris, people keep asking me this, and I'm going to give an answer here.
Okay.
As transparently as I can. People keep asking me, I'm getting DMs and getting emails and getting comments on stuff. Nick, is it too late? Like where should I be getting in on gold? And look, it's not financial advice. I'm not here to tell you what to do with your portfolio. Chris and I, we're in this mud too, right? We're pushing through trading. We're figuring out ourselves. We're not here to tell you what to do with your account.
Yep.
And here's my opinion. It is too late. It is too late. Like, and not to say that it can't keep going higher.
It's too late to go all in. Don't go all in.
To go in, and this is my opinion. Again, I'm not telling you what to do with your account. I'm telling you that in practical trading land, the move has happened. It could keep being ridiculous and keep being, as we said earlier, unbelievable. It could keep going, but like from a practical, is there a setup here where I can take a rational, pullback? I think the chart is erratic. The chart is just insane. And so I can't really, like, I'm in a trade right now, and I've just been trailing stops. And every time I do it, I'm like, how did I get away with another trailing stop? Like, this thing just keeps, I've said to myself, like, I should probably just take profits so many times, and that would have been the wrong thing to do. So the chart has broken. Something has completely snapped on gold. And so when you get into snapped territory where the chart is just erratic, I cannot make a logical, like, hey, I think it's going to do, when you have technical structure, it's different. When you have technical structure, when you have pullbacks to supports, when you have moving averages being retested, you can structure a risk reward scenario that makes a lot of sense. My opinion is it is too late to be establishing new aggressive positions at these levels. If you are a swing trader, position trader, etc. Not to say that I'm just saying the risk reward there is not the same as it was over here when I took this initial trade. This has been an insane trade for me. And I'm just telling you, I'm still in it, but I can't with a straight face say like, oh yeah, the risk reward is just as good right here to buy gold. I just don't think it's there. I think, I'm managing this trade and I don't know how long it goes.
Yep.
But the risk reward is not there for me to take new trades.
Yeah, the only way I would even remotely say that it's okay to take new trades would be go to a much smaller time frame. If you want to play, okay, look, it's been doing this for 18% and it hasn't broken this red line. So if I looked at, I can buy here with a stop loss very tight, it would go break some highs. For a scalper, there's a trade. There's a scalp, but that's it. Like, I don't see anything good as far as like buy and hold like you've been doing and getting, I think you've been surprised by multiple times already that you've already moved your stop loss. Because it's not getting hit, and it just keeps going higher. So dude, it's a great trade. It's a great trade. You're in the two camp of how this trade's treating you. But I think look, it'll wick you out at some point. It'll stop you out at some point, and that's fine. And I know you're going to look to get back in. For me, it's like I do want to have gold in the portfolio. Do I think it goes higher? Yes, and that's why I'm like, could I just justify it now? Sure, for a small dip my toe in the water type trade, but I am participating in gold and silver. It's just gold futures, GLD, naked puts, ratio spreads. I'm just kind of waiting. I'm waiting. So
I think that when we talk about like stocks, we talk about like valuations getting really stretched when you have these types of rate of change moves that are so ridiculous. When we talk about gold, my fear is that it is unbelievable hype is being priced in, like, or not necessarily hype, but like fear, like this worry about Trump's going to do this and Greenland. And like, I feel that it's getting
over stoked in terms of worries around that scenario. And so that's where I'm saying the risk reward there. It's like, even if I get knocked out of the trade, as you mentioned, if I get knocked out of the trade, I'm going to take a close look and be like, I might have gotten away with murder. Like, you could get this kind of move right around the corner. So,
well, the 30, I mean, we're 30% away from the 200-day moving average. It's like, if I am even close to being right with that getting tested, then we have a 20 to 30% correction coming. And that's, I mean, in terms of dollar amounts, like, that's a lot. That would be going from 56 down to 3,800. That's going to squash a lot of hopes and dreams for, I bought gold at 5,000 plus. So I'm hoping that, you know, I'm not, and I don't think that calling the bottom is going to be easy, but I think that, you know, getting some 5,000, 4,500, 4,000, 3,500, if those levels are even offered, I'll be happy to add that in and start, you know, having a bit more of an allocation that I'm like, okay, I'm finally building my position back up again. Because if you give it, you know, 2, 3, 5 years, do I think that gold can be at 7,500? Sure. 10,000? Sure. Silver, I don't know. Honestly, at this point, I think gold is probably the better and smarter, like, long-term play, where silver just like had its day in the sun and I profited from that. But
I agree.
I don't know if silver is going to be something I'm stoked to buy.
It's at 120 an ounce.
Right now. Like, I don't care if silver pulls back to 60. It's like, it had 40-year highs at 50. Why now is it's like it blew the lid off and it's at 118, 119. It's like, so that's the new high. I mean, what if it is a multi-decade top? Once it stalls, it's like we don't come back to that for 10 years. I don't want to be stuck in silver when it's like, I think gold's probably the better play. But silver was a good trade. Like, gold's always been a good investment as far as like long-term stuff. This is surprising everybody, but silver's a better trade. I traded silver. Now I'm like, I'm just going to trade more gold. I think gold is a better investment.
And Chris, some people in the audience pointing out, well, silver has a use case. Yoshi, no way.
It doesn't matter about the price. The use case is we need it, but it's like it's priced inelastic. Like, it doesn't matter. Silver's $1,000. It's like everything that's needed for silver. It's still going to be like, okay, our phones need silver. The one sliver that you punch your SIM card, it's like, who knows what tiny little piece of your phone is silver, but it's like, okay, it's needed. I just think it's just getting overcooked, man.
And I think that I agree wholeheartedly. Silver is, I mean, there's no dispute. There's no debate. Silver is an industrial metal. It's used for everything. Everyone needs silver. Like, I'm with you on that in the audience, Yoshi. Here's what I'm saying, though. The use case price of silver is probably different, in my opinion, than the going hype trade price of silver. Like, in my personal opinion, and you're listening to someone who is currently long precious metals, and Chris and I have both loved the stories for precious metals. We know the stories. They're not new stories. The use case for industrial metals, they can only pull up so much out of the ground relative to the demand for it. The supply demand imbalance makes silver really aggressively attractive. It's used in solar panels, data centers. Those stories are not new. Some of these, national debt crisis, these are 15-year, 20-year stories that the gold and silver bugs have been, touting for a long time. I agree with them. I'm a long-term, believer that having precious metals is a spot to be. What I'm saying, though, is that story becomes less and less, it has merit to it, but there is such thing as also getting overblown in the sense that now it's like a hype trade. Now it's like the new Bitcoin. It's almost like, well, I take it back. Bitcoin was like the new gold for a little bit.
Right.
And now gold has taken back its throne. Silver is catching up. So I don't know. Just be careful with it. That's all I'm saying.
Yeah. I mean, it's going to give us lots to talk about in 2026. I just hope they're, as somebody that likes trading, I hope that it just is giving us something that can make sense, and we can actually say like, okay, I like this trade now, versus like, I feel like I have to just jump on board and, do like, I know that I'd be breaking my own rules. I'd be non-disciplined if I'm like, I'm going to just jump on board. I have participation. I need to tell myself that, yes, my position is not as big as I want it to be based on what is happening right now, but I just closed out a, 4-year bullish trade on both gold and silver, which were trades. Now it's like, okay, I want to invest. I need to figure out how to invest. And guess what? If you're an investor, you need to be patient. So I'll keep telling myself that, and everyone can be like, oh, he's just going to tell himself that and never participate, which that's kind of what's going through my head right now. So trust me, I'm beating myself up every day for not participating more, but I also can't bring myself to break my rules.
Well, and the thing is, you guys have to understand, Chris, you've been trading for 20 years. How many times? I've been trading for 10. I know just in my 10 years, although I've caught this gold trade, there's been so many times where I've been right about something and missed a huge chunk of the gains and felt really annoyed by it. But at the end of the day, being annoyed and trading, they're like the same word. Like those are the same. Like that's
constantly annoyed.
Like you're constantly annoyed. You're constantly like, I should have had more allocation here, or I should have been more, targeted here. Like you can always do that to yourself. But at the end of the day, some people will still be trading in 5 years from now. Most people will not. The people who do have patience and they manage risk. And although these sort of moves annoy 90% of people most of the time, hey, it's better to be annoyed and live to fight another day than to make silly decisions and kick yourself for the next 20 years, right? Like you gotta
or blow up your account
with this stuff. Yeah.
Yep.
Chris, I think we got to move on. We're past time. You got to move on to your next stuff here. So we'll get you out of here. We're still waiting on our next show host. So thanks for coming on, man. And
for sure.
We'll talk more pretty soon.
See you tomorrow. Yeah.
See ya.
Thanks, Nick.
Okay, up next, I believe we have Miko here. He's going to be taking over the stream, talking some technical setups happening in this market right now. Before we head over to check out Miko's latest, real quick, if you guys want to check out the free Telegram channel, take a second. We'll drop the link here in the chat. Highly encourage you. If you can't make it to every live stream, if you don't have the time to listen to everything we say, get the bite-sized analysis that we're putting out every day on the macro front. If you want updates with what's going on, what's impacting gold, silver, dollar, S&P, etc., we do it every single day, and it's completely free. The Telegram channel just got dropped in the live stream chat. Join us over there and stay up to date with what's happening if you are a aspiring macro trader or you just want to know what's impacting markets now. With that said, up next, Miko Audu. Stay tuned.
Hey stream viewers, if you're outside of the United States, I have a cool offer I want to tell you guys about thanks to our partnered broker 8cap. 8cap is currently offering the ability for new depositors to get access to our premium tool, the Edge Finder, completely for free. Now how this works is basically you create an account and deposit a certain amount of money into that account and they will essentially buy the Edge Finder on your behalf. So it's a win-win-win. They get a new client for a reputable brokerage, you get access to the Edge Finder and a great brokerage to trade with, and you'll be supporting the show by signing up with 8cap. Now here are the steps if you want to find out more about this specific offer, but make sure to follow them specifically as we list them out on the screen here. Step 1, navigate to a1trading.com/8cap. That's a1trading.com/8cap. Step 2 is to follow the instructions and to make sure you use the specific link on that screen to sign up for your new 8cap account. Step 3, complete the required deposit amounts and contact their team as instructed on the page. So if you're interested in finding out more about this offer, head over to a1trading.com/8cap, and we'll also be dropping the link to this down below in the live stream chat as we speak. Like I said, make sure to follow those instructions specifically if you'd like to get access to a free copy of the Edge Finder if you meet the deposit requirements as listed on the website. Full information, like I said, can be found a1trading.com/8cap. Now back to the stream.
Okay, what's up people? Hope everyone is doing good. Glad to be back. Of course, we'll go through a bunch of markets, share my opinion, what markets I'm looking at, what markets I'm trading. If you do have any particular requests, any instruments, any markets you're looking at, feel free to drop it in the chat. We could definitely take a look and see what you guys' opinions are. But my focus has been a lot with the indices as of late. I have not really been trading FX much, but of course I'm definitely keeping an eye out. I've had some big moves, and typically if I'm not already in the position before big moves happen, then I need to wait for price to settle and accumulate again before I can look for ideas. So we'll go through that. But like I said, my focus has been on the indices, especially NAS 100. I've been in and out of a few trades with this one in past couple of weeks. A little bit early on the timing with a couple positions. I did have a trade over here which we went through last time I was on the stream, and had one here as well, and I did manage to get a re-entry, and we have seen some nice upside. Probably wasn't the best entry I could have got, But nonetheless, beggars can't be choosers, and that was at the moment in time the best entry I could get. So price maintained structure. We've had the follow through. We were talking about this last week in terms of the S&P was already making new highs. US 30 was making new highs. NAS 100 hadn't made new highs or even retested highs since late October 2025. So that for me gave me an opportunity to hopefully take advantage of the catch up. NAS 100 catching up the S&P, catching up the Dow Jones, and we have made that over the past few days. So now that price has hit that high, I have taken some position off the table. I'm still looking for higher highs because that's still my bet. So I'm still holding onto the position. But as soon as we create higher highs, if we do create higher highs, I will start to manage a bit more aggressively with trading stops, and we'll see how far we can take that one. In terms of the other indices, I was looking at the S&P, but it just didn't really pull back enough for me this week. We had a really kind of bullish Monday. So price gapped down, then it was very bullish. I didn't even see any retests of structure. And again, the plan was still the same, a push back to the highs, and that happened pretty early on in the week. So no real opportunity there. And then I didn't really like the Dow Jones. That was very, very messy. Again, failing to make highs on numerous occasions, arguably in a bit of a consolidation. So the focus has just been primarily on the NAS. And then I was looking at opportunities on gold and silver coming into the week. But again, I just wasn't aggressive enough to catch a opportunity on both of them. So coming into the week, where were we? Tuesday. Okay, yeah, we had the gap here. So yeah, the structure I was looking for the retest for gold, which I thought at the time was, okay, this is not necessarily too aggressive, but it's a pretty reasonable break and retest I could hope for, because this is where we ended the week last week. And this is where we opened up for this week. So I said, okay, price is probably going to be bullish. If we can get a retest and maintain this zone, I would expect the trend to continue, and then we'll see what happens from there. So that was primarily the plan coming into the week for gold. We had a bit of a gap, and of course we started off pretty bullish. And I was like, okay, if the retest happens, I'm looking to place entries. We had a bit of a gap fill here, which could have been an entry. Not really something that I take much. But we didn't get the retest of structure, and since then we had a brief consolidation. Of course, gold has been absolutely flying, and then I was looking to see, okay, this is my new area. Then even this was going to be my new area here as well, but it's just been so bullish. So not aggressive enough with gold, but again, I was trying to be more aggressive because I typically look for deeper pullbacks anyway. And then silver's been a little bit sloppy, to be honest, so I wasn't really so concerned with silver. Yes, silver's still flying to the upside, but it's a little bit more grindy. Of course, still a very, very bullish market and still flying. I would probably consider probably a retest of the high. Maybe if we can show a bit more emphasis, maybe on like a daily chart on a nice strong close, just because we're a bit more corrective. But to be honest, onwards and upwards, momentum's still very strong. The play is still looking for longs, because you'd rather take a buy and get stopped out in this environment than take a premature sell. That just doesn't make any sense in these conditions. So that's really where I see the opportunities out in the indices and in the metals. Looking at the FX markets, of course, these have been very volatile as well. We've seen some big moves, but a little bit harder to catch. And since we've had this kind of explosion over the past week or so, I'm not really going to be looking to play pound USD in the same way I look to try and pay gold in that current climate, or like the S&P. I wouldn't be looking for aggressive pullbacks on pound USDs. It's nowhere near the same conditions. Yes, price is very expansive right now and trending quite aggressively, but I wouldn't expect this to continue in the same manner. Of course it can do, but historically gold doesn't, pound USD doesn't do that. Gold in the right cycle, in the right climate, will. And of course we have the natural drift for the S&P and other US indices as well. So I would never really be aggressive on an FX pair unless there's some very specific circumstance. Generically, even if we're volatile, I'm waiting for price to start to find structure again, retest structure, and then of course plan from there. So with this big move, with a lot of the USD pairs, because I'm not already in a trade for them, I need to wait for things to settle again, accumulate, find support, retest support, find structure, and then I can bet on continuations or reversals depending on the situation. But I'm not really so trying to predict anything at the moment, because momentum's just very high. They're breaking through significant levels. If you look at the Aussie dollar situation. We broke through a very significant level of resistance, which held since June 2023. We've had numerous tests of that area. And of course, we're seeing a very explosive breakout at the moment. Looks like we're pushing into 0.71. So we'll see what price does at that level. So again, I'm not necessarily trying to predict if price is going to react here or break through. I'm just very much just taking it day by day before I develop any kind of idea with the USD pairs. Yen pairs I'm keeping a close eye on. And let me see if I can... Okay, yeah, we'll take a look at Euro USD. Hey, what's up, Ashley? Hope you're doing good. What's up, everyone? Hope everyone is doing well. Yeah, we can take a look at Euro dollar. Absolutely no problem. Dollar CAD as well, we can take a look. I'll look at those before I move on to some yen. So yeah, Euro dollar, same situation as well. So again, you don't want to get lost in the sauce here. We've seen very expansive moves. Don't treat this like a gold market, because they trade fundamentally differently, especially when gold is in that bull cycle. So you don't want to get trapped. You're seeing all this momentum. You're like, okay, let's buy into that. Doesn't really make any sense with how Euro USD, how FX pairs move. So you can be aggressive on gold because the nature is correct. Euro USD, that is not correct fundamentally. Doesn't mean, again, we can't continue this. It's just probably not the best play over a big sample size. So again, with Euro USD, in terms of opportunity, if I just want to keep it super simple, price has been very bullish, so naturally we're going to have a bullish bias. But since we're breaking through major resistance to our left there, is this now the best time to be looking for buys? Absolutely not, according to how I trade at least. Again, if you're looking for breakouts, I understand that, but again, Euro USD, especially in this climate, I don't think breakouts is probably the best play either. So I would wait for price to pull back into structure, preferably into this area, anywhere within here. This is where I would say, okay, buys do make sense. We'll monitor price, see how we react. But this would be a comfortable zone to pick up some nice swing trades. Doesn't have to be a home run back to highs, but you're buying at a sensible price. Even if price just has a run halfway, that's still a reasonable move to catch. Buying here just looks way too late for me for Euro. And to be honest, selling does make sense, but I'm not seeing any signs that the market's about to turn over. Everything is still pretty bullish, so selling, I would say, is still a bit premature as well. So I don't see much opportunity unless, again, you scale to me like a 15-minute chart or below. Intraday, that's a different situation. But purely from intra-week trading, swing trading perspective, I would be bullish in Euro, looking for dips to take that higher. And that's really the same case with a lot of these USD pairs. Dollar CAD, of course, very bearish and still falling as we speak. It's gone and broken through this low as well. So again, do I want to be selling at these prices? No, not really. I want price to pull back, find structure again, take a breather before we do continue. Not to say we can't continue lower. It's just I wouldn't want to position myself there, especially if I'm holding overnight. And my plan is to hold for a few days. So dollar CAD, what would be the play here? Well, there could be some buys, some mean reversion opportunity. The market is quite stretched. There is structure to our left here. We have been pretty consistent holding these higher lows on a weekly perspective as well. So I do think dollar CAD will eventually have a bit of a bounce, even if it's just a retracement for us to go lower. So there could be some short-term buys there, but again, way too early to start to forecast that or start looking for entries. The market's still currently falling right now and creating new lower prices. So any longs, again, it's still a bit premature. So I don't see much opportunities really on the USD pairs. Like I said, if you were already in the position, then you've taken a bunch of some nice swings there. Entering now, I would say only if you're looking for short-term ideas, like you want to be in and out within the day, then I can see some logic there. Dollar CAD still falling. You can perhaps catch a bearish US session there, and then you're done. Because the market is quite stretched. We're breaking through numerous big levels. Do I want to hold positions short here for a long time on an FX pair? No, not really, especially when we're coming into structure. So short-term plays on the USD pairs, momentum is quite thick and fast right now. So I think that's actually a smart move if that's your style. If you're looking for slightly longer-term plays, I think waiting for the next phase in this move, whether it's going to be reversal or continuation, would be the smart play. And yeah, Aussie dollar, pound USD, Euro USD, New Zealand dollar, they all have the same characteristics. Very, very volatile right now. I wouldn't want to short, fade the momentum, and I wouldn't want to go with it right now unless I'm looking for a short-term play. And in terms of the yen pairs, they've been interesting. I did say I'm looking at some shorts on Euro yen. And again, I'm going to be very, very kind of, what's the word I'm looking for? Short and sweet. I'm not looking to stay here for a long time because Euro yen is still a very bullish market. All the yen pairs are still very bullish markets. Despite the crazy sell-offs we've seen over the past few days here, the market, again, if you're looking on the daily perspective, weekly, is still very much an uptrend. So we shouldn't let that kind of daily price action, 4-hour price action distract us from really what is at play still, which is still very much a bullish trend. So I'm liking the shorts, but I wouldn't be looking for something like this. That's a little bit too optimistic in my opinion. But I do like the downside. Why? Because every time price does create a new high here, we keep selling off back into the same support level. So it's clearly showing us that although buyers are still successful in pushing the trend further, they need to reach back to the same place to find necessary buyers to stabilize the trend here. If the market was still creating higher lows, well, that shows us the buyers are still very forceful. The market does look tired. We're seeing more aggressive selling pressure. Potentially we could see the yen start to gain strength temporarily. So I do like the downside moves here, but I wouldn't be looking to try and take it past support. Maybe I might leave positions to run just in case, but I wouldn't bank on that happening. So if I could see something like this, a push back into resistance, perhaps if we can maybe wick through the highs here, just so I can get an entry really close to that level itself, and then I can get a stop loss with a bit of room. That would be an idea that I would be attracted towards, and then I can bank most of my profits here, and then maybe we can continue to sell off. So I'm keeping an eye on the yen pairs for some short-term sells. Fully aware this is counter trend, so I'm not looking for anything spectacular. And I would say Euro yen's probably my favorite. I do like dollar yen, but dollar yen's kind of already fallen a little bit too far for me. And then Swiss yen still a bit too bullish. Pound yen's not bad. New Zealand yen's still too bullish. CAD yen's not bad either. And then Aussie yen's still way too bullish as well. So being very cautious with the yen pairs. Don't want to get carried away with the shorts here, because let's be honest, that's kind of what the theme has kind of been for quite a while. We've seen these yen pairs trend for so long, and every time we see a meaningful down move, we're like, okay, this is probably the end of the trend. Let's start looking to sell, and then it continues, and then another meaningful down move happens, and then you think, okay, yeah, this is the end of the trend. Let's start selling, and you're just shorting a bullish market at the end of the day. So you have to be very, very careful if you are going to go counter trend, which means your targets have to be aware of that. You're not looking for home runs. And if you are looking for home runs, you're well aware that things can reverse pretty quickly, and you're managing your risk accordingly, maybe reducing your position size or maybe trading a little bit earlier, however you want to manage it. But yeah, higher time frames are still king, and they are still pretty bullish in my opinion. So short-term sales could be there, specifically on Euro yen is the one I like. Others, I probably will give it a pass. And like I said, with the USD pairs, I'm just going to be very, very patient. And then BTC was a market I was very interested to trade last week, but we had this crash here, well, mini crash. I still do like BTC to the upside. I still do think we're trading a very interesting area where if we can hold this, there is definitely room for a swing back into this 110, 115, 120K area. I'm not necessarily looking for new all-time highs or a huge another bull cycle. All I'm looking to see is, can we respect this prior low? And if we can, there's a good chance we'll come back and test that consolidation, which gave us this bearish move. That's all I'm looking to bet for BTC. We could go a lot further. We'll find out. So I am keeping a close eye on this one, but again, still a little bit too early for me to look to long, especially after we broke through this low last week. I didn't like that because we were so consistent with these higher lows, and then suddenly we're not consistent anymore. So that's kind of changed the structure of the market a little bit. So what would make me interested in BTC is if we were to go and break highs again. That would give me confidence again that, okay, the buyers are still in control. We are still steadily pushing up in this very corrective bullish structure. And then I would be happy to take the next dip to take it higher. And in my opinion, risk reward makes a lot of sense there. So I'm keeping an eye on BTC. A very similar opportunity on Ethereum as well. But Ethereum doesn't look as good, mainly because we failed at highs here. I don't like that. BTC was successful at highs and made new highs there. So that's why I'm more interested in BTC. But of course, they probably will all follow suit. Just hit the mic there. So yeah, that's kind of really where my focus is. There's not a lot of markets really which I'm interested in at the moment. Again, like I said, I'm currently trading NAS. I'll keep my focus there for now. We can take a look at the DAX, no problem. Okay, so we'll go through trade too many FX, too much unrelated, only focus on the majors. That's a good point, to be honest, especially if you want to go for precision. But my mentality, especially with markets, is I'm always looking for a good opportunity. And I understand the aspect of if you focus on less, you can get better at that particular market, like the majors. But my mentality is always any market could provide a very good opportunity. Everything is kind of a unique situation. There could be a very nice setup on Euro Swiss. Of course, fundamentally, the market's not as crisp as like a Euro dollar in terms of spreads, swaps, whatnot. But there could be a very nice opportunity in Euro Swiss. I don't want to completely block that out. And that's why I stay on the higher time frames, because I only check Euro Swiss, I only check all these FX pairs, once a week, and that's on the weekend as well. So I'm not looking for every, different market every day. Once you create a watch list, once you understand what you're looking for, you have the flexibility to trade different markets, because all you're looking for is a good opportunity. Doesn't necessarily matter if it's Aussie CAD or Euro dollar or gold. If there's a good opportunity, it's a good opportunity, but I understand the logic as well. Anyway, we can take a look at the DAX quickly. Not a market that I look at actively, but I do keep an eye on it. Yeah, trend is still very healthy here. It's an interesting one with the DAX, because we've had this consolidation for quite a while, and it's kind of not quite clear if this is a legit breakout, or are we trading back inside the zone, or heading back inside the zone, and this is looking like more of a fake out, and price might start to consolidate again. Although we hopefully will find out in the next maybe 24, 48 hours, or maybe going into Monday next week. I would suggest if you can like double bottom here and see price go and break resistance here, that would show to me that, okay, this prior resistance is now holding pretty well at support, and then it becomes a pretty clean trade back to highs. Not a lot of resistance above our heads. Momentum's still pretty bullish. The fact that we're holding this as support is quite critical, and the odds of us pushing back to highs would be pretty high, and probably new highs as well. If we do close firmly below, especially by the end of the week, so the weekly candle closes below as well, so you got the daily, weekly as well, then the break and retest trade is not really on. I wouldn't really be looking to sell, to be honest. Be back in the consolidation, things will get sloppy. I think the real trade is the continuation back to highs, but of course, I would want to see us confirm this as support first. So the DAX, I will keep a bullish bias for now, but I want to see more evidence that we actually are finding support and breaking to the upside. Then, yeah, a push back to the high becomes a pretty realistic idea there. So still looking for the bullish bias, not so keen on the sales, especially when we're coming into a range. It's not like we've got a clean path, to go lower. So I'll be careful there. But yeah, guys, we have approached the end of my segment. I do really appreciate A1 Trading for having me on the stream. I really do appreciate that. Guys, if you have found it useful, go check out my channel. I do more of this on my channel, so if you're interested, go take a look. But really appreciate the opportunity to be here. Hope you guys have a great day, great weekend, and I'll catch you all in the next week. Take care.
Hey guys, I just wanted to jump in for a second and let you know a little bit about today's live stream sponsor, DNA Funded. DNA Funded has very generous profit sharing up to 90% and 3 different unique challenge types. For those looking to get funded, they also have speedy payouts, unlimited trading days on the first and second phase of their challenges, a very wide list of different things you can trade with over 800 different assets tradable, and maybe the most important component, a very experienced team behind the whole operation. So if you're interested in learning more about DNA Funded, click the link, check it out, see if it's right for you, and make sure to do your own due diligence to see if what they have to offer fits your trading style. For 20% off, you can use code A1T20. Again, that will be 20% off any of their challenges you'd like to check out. Thank you again to DNA Funded for sponsoring today's live stream. Now back to the show.
Hello everyone, welcome to my segment of the stream. So today's Thursday, we had the Fed meeting. Did you watch the Fed meeting? What did you think of the Fed meeting? Put it in the comment section. My conclusion from it, it was a nothing burger. So it was a non-event. The problem is Powell, his term is ending. He's sort of a lame duck, which means he has pretty much no effect on what the Fed does in the future. I think his term ends in April, and he doesn't seem to be interested to comment on Trump, comment on the indictment, comment on the pressure from Trump. He did make sort of a speech on the topic, but during this press conference, I don't think he mentioned anything about it. If you look at the market reaction, best thing is to jump onto the DXY, so jump onto the US dollar, and then look at the lower charts, of course. Looks like today is the day when I have trading view issues. So every 2 months, I would say trading view is extremely slow, and then pretty much we all suffer. Let's go to the 1 hour chart, and let's take a look at the Fed decision. Yeah, this is going to be a bit tough to go with a laggy chart. So here is the Fed press conference, interest rate decision. They kept rates the same. Market interpreted the event as bearish because we sold off a bit. But if you zoom out, this is minimal movement. So let me also try to maybe close out of this window, open up a new window. Let's see, tradingview.com, launch. Whoop. Come on, to the left. Let's see if this will be a bit faster. Anyways, if you go to the Fed watch tool, what do we have priced in? I don't think anything changed as far as the pricing goes. So by the end of 2026, we have 2 rate cuts planned. So 2 rate cuts of 25 basis points. The probabilities haven't really changed much. I don't think, we didn't get the future projections this time. There is usually 8 Fed meetings per year, but only 4 meetings contain the future interest rate projection. That document is pretty significant. That document is usually market moving. This time we didn't get it. So we're going to get this document in the next Fed meeting, and we may get more clarity at that point. You may look at things like Polymarket. You can write new Fed chairman, Polymarket, but this changes. So who will Trump nominate as the Fed chair? This constantly changes. You know, Kevin Hassett was the leader, but now he is extremely low. So this thing turned out to be super unreliable. I did look at this. So I did look at this extensively, but this is just unreliable. No one knows who will be the new Fed chairman. So a nothing burger for the US dollar. They changed something a bit. See, it looks a bit cleaner now. Looks like they updated the UI on TradingView. That's pretty nice. I have one position in the markets. It is a buy setup on the Nikkei. So a buy setup on the Nikkei, currently running in a little bit of profit. I like this position. I think the edge finder is no longer bullish. Let me take a look. So if we go to the top setups, we type in Nikkei. Nikkei neutral reading at the moment, but when I took this position, it was a bullish reading. And also, we had some definite outperformance of the Nikkei compared to the S&P. Yeah, pretty much compared to the S&P. There is a little bit of capital flight out of the United States, but it's no biggie. It's not like the end of the world. It's not something we should be majorly concerned about. If you watched or paid attention to the meeting in Davos, where Trump had a speech, and a lot of European countries were super negative US, and you had some headlines about a lot of hedge funds, pension funds, big players, money managers exiting the United States. That's mostly words at this point. So if they were really exiting the United States, the S&P would not be near the all-time highs. So we would get a crash on the S&P, absolutely. The bond market, which we can look through TLT, would not be at 87. I think we would be much, much lower. You would see a definite bearish reaction on TLT, okay? And the 10-year yield would probably explode higher. So the dollar selling off is not really a sign that that something is majorly wrong with the US and that people are massively exiting the US. The dollar does not represent that. The dollar is still the biggest, the most popular, most important reserve currency of the world. And if the European players put their money where their mouth is, they would have massively sold the S&P and the US bond market. So you have to be careful when you're looking at these events and these sort of announcements and news snippets because it's just noise. Charts don't lie. Headlines most of the time are unreliable. So the price never lies. And the Europeans have still not started to massively, drastically sell US assets. I thought that was worth commenting. As far as the markets go for today, do we have any massive movement? Well, metals, absolutely. Looks like gold is up 2% on the day. Crazy move on gold. I absolutely want to get in, but not at this level. So this is now just too high, has gone too far away. And I'm not going to be the one to catch the price or get in at the all-time highs. Silver, same thing. Silver continuing higher. To be honest, I thought this huge wick was a sign that we're going to get a sell-off, that we were going to get a bit of a pullback, a bit of a correction. That didn't happen, so the price just keeps on exploding higher. If you look at what let's look at some sentiment numbers. So let's look at the latest Commitment of Traders report, so COT report, and we can look at the gold, and we can look at silver as well. So gold, the big institutions in the last print, they actually sold some gold, and they sold quite a lot of silver, which is the net percent change. So you want to look at the net percent change. Overall, they're still massively long, of course, both silver and gold, but they seem to be selling at least a bit. If we go to the history, let's take a look at the gold. Gold. Last print was a sell, but they have been increasing their position overall. Let's take a look at silver. This gives you a nice trend. So yeah, long percentage. Silver, they have been kind of selling a bit of silver since September 2025. Yeah, that's what it seems like. And now let's take a look at the crowd sentiment. So we can look at the AAII sentiment. I think the last one came in pretty bullish. Okay, but no, sorry, I wanted to go to the put to call ratio. Put to call ratio on gold. Let's take a look what's happening there. Bullish sentiment from the retail folks. What about silver? Well, we were in the high put volume, but looks like we are now kind of in the middle. So you're getting a divergence. Looks like the big players have started to sell gold at least a little bit, and the retail is long on gold. So that's not the greatest sign. Does that mean we are at the top? Absolutely not. It's extremely hard to call the top. Extremely hard. I would not be looking for sell setups on gold. Absolutely not. I would look for buy setups, but not, of course, at these levels. So gold and silver are still sort of the stars of the show. NASDAQ, I have put the NAS on my watch list recently. Why the sell-off today? I'm not sure. Let's see. Let's see, breaking news. Do we have anything? If there's a big move in the markets, I usually jump on to financial juice. This was from yesterday, but let's take a look at Forex. Do we have anything? I focus on the news that is in red. No. No, I don't really see much. Anyways, the NASDAQ has attempted to go into all-time highs, but rejected from that. I think it was actually earnings. I think it was earnings. I think Meta had earnings. And I think it turned out to be bullish. We're still laggy. So we're gonna have to wait a bit for this to load. Sorry about that, but it's out of my hands. I'm gonna look at the comments until we do load. Hello, Sluggy. Cycling Club, welcome. Let's see, have we loaded? Yes, we have loaded. Okay. Meta exploded higher. What about Microsoft? Microsoft Corporation. I think Microsoft had earnings as well. Pretty bad turnout, pretty bearish. Possibly pushing the price of the NASDAQ lower. So not the greatest story. I'm going to slap the NAS back to off the watch list, you can say, because I'm looking at all-time highs, if I'm being honest. I would like to see all-time highs on the NASDAQ to look for buy positions. I'm a bit afraid to get stuck in this flat range. Okay, that's kind of what I'm scared of. To get stuck in this flat range, flat price action. Yes, there is an opportunity to take a buy entry at this level, which could act as support, but I'm a bit uncertain. So my focus is on the NASDAQ. If I'm looking at the US equities, I would like to see all-time highs. Sluggy, unemployment data rolled in slightly worse than expected. Well, which data print are you referring to? Let's see, Forex Factory calendar. Unemployment claims. I mean, the claims are not that important, in my opinion. So the claims is not something that moves the markets a lot. NFP is something that definitely moves the markets. Claims, though, they came in pretty close to the forecast, so I would not expect that to produce a massive move. That's just my opinion, of course. What do you see for gold? Marco, look at copper. Binance official exchanger have a bug. The exchanges, okay, this is a scam. So, James, if you can please ban the Smithless username, because he's clearly promoting a scam here in the comment section. HK50, German 40, Euro Canada, UK, NZ don't want to leave the dollar. But if Trump keeps pushing, they will start dumping. I don't know. They threaten a lot. Like Canada, Europe, UK, New Zealand, they all do a lot of threats. They do a lot of yapping, a lot of talking, but it's just not being reflected in the markets. So S&P is still pretty high up there. I have these conversations with my dad. He's super pro-Europe, which is fine because he's European. But that's all talk. I think even Mike Carney, who is the PM of Canada, had a great speech, really nice speech about moving away from the States. But they haven't sold any of their US assets. It would be reflected in the price. So it's just talk, it's just yap. And it's kind of getting annoying, if I'm being honest. They should do something, make some moves in the markets. That would make things a bit interesting. US still, I think, the safest, the best market in the world. Now, I'm not saying the money is not flowing into other things. It definitely is. but the US is not doomed. Copper flying. Kramer said hold, gold, sell silver. Earnings, US oil exploding. AUD USD, MSFT down. MSFT good earnings, just too much expectation. Interesting. Okay, yeah, thank you, James, for banning the scammer. Hello, Nick, your number one fan here. Thank you very much. But I'm not Nick, I'm Marco. So you should jump onto Nick's segment. Ball out, hello. Let's see. A lot of talk about copper. Let me take a look. Copper, absolute explosion. And looks interesting. Copper, if it does pull back a bit, I'll be pretty interested to look for buy setups. What does the Edge Finder say? Top setups. Let's see. Copper. Whoop. Like this. Oh, has to be all caps, I'm guessing. Ah, here it is. Neutral reading at the moment. Not the greatest thing, but I would still consider a long setup. One thing that I know, solar panels, big story in 24, 25. It's going to be a big story in 2026. What is used to make solar panels? Silver. They use a lot of silver. But if silver keeps on exploding higher, it's going to become impossible, or it's not going to be viable as a business decision to use silver for production of solar panels. Switching to copper is a good alternative. So if silver keeps on exploding in price, most of those guys producing solar panels are going to start to switch to copper. That should increase the demand, and that should push the price of copper higher. So I'm highly interested to look for buy setups on copper, especially since we now got a breakout out of these highs. So I'm looking at that 20 MA. I'm looking at this level of support. And then I think it could be pretty high probability to get in on a buy setup. So I'm loving copper. Hopefully there's sort of a kind of a delayed move on copper. You know, gold and silver have already exploded. Now it may be time for copper and platinum to follow, because metals usually move in tandem, especially because of the reasons that I just told you with the industry reason for silver, solar panels. They're going to replace it with copper. Now, time for a bit of a plug for DNA Funded. So if you're looking to get funded, expand your trading capital, DNA Funded is a great option. So what I recommend is, if you go to the two-phase option, you go to the 25K, 50K, or 100K accounts, and on this price, you get 25% off if you use the code A1Live. So A1Live gets you 25% off any challenge on DNA. Again, what I personally use is the two-phase one. It has a static drawdown. In my opinion, it gives you the best terms and conditions, and these are the parameters. So the max daily loss is 6%. Target is 10% phase one, 5% phase two, and that's how it goes. Okay. So A1Live, 25% off. Check it out. Great prop firm, great competitor to the big guys like FTMO 5% or Z8 Markets. And with our code, you get, I would say, the best price, the most competitive price. Okay, let's continue. So copper, I love. It's on my watch list. Aussie dollar, for me to run through my watch list as to not forget it. Nikkei. So I'm in, holding this position, trailing my stop loss. If it wants to take me out, that's okay. If it wants to keep on trending higher, that's fine as well. Aussie dollar looks like gold, looks like silver. I don't want to buy these highs, but on a pullback, I'm going to be interested to look for buy setups. So Aussie dollar is one of my favorite currencies. I would say even my favorite currency. So favorite currency at the moment. And I'm looking for pullbacks because I want to get in. I want to buy it. Pound Aussie. I don't think I'll get an opportunity, if I'm being honest. Yeah, we have just dropped too low. This has been a pretty massive move. Let's see, GBP AUD. Bearish reading right there, which is nice. But of course, I want to get in around the 20 MA. Let me see the 1 hour chart. How does that look? Okay. So I don't think I'm going to get much, if I'm being honest. I think most of the big move has already happened. I'm going to have an alert set nevertheless, but yeah, the move happened without me, unfortunately. Gold, told you, looking for pullbacks. Copper, the same. So I'm looking for those pullbacks to, let's say, this level of support where I do have an alert set. Let's move it a bit higher. Comments. How is it going, guys? No tails today. I'm not sure, what do you mean? I know you're not Nick, Marco. Okay. Hello, Trade Like a Tiger. Welcome. Lagging 50 minutes. Hey, Rabahola. Ball out sold some dollar. Copper looking good. Futures. Do base metals move at a slower pace to their precious counterparts? That would be a good study to have. So basically you're asking, does copper, or do copper and platinum usually lag behind gold and silver? To be honest, I haven't done my research on this, but at the moment that seems to be the case, because you had a massive explosion on gold, you had a massive explosion on silver, while copper and platinum have been lagging a bit. But they should move higher. They should definitely move higher, especially because of their use in the industry. And silver can be replaced by copper in some specific, let's say, branches, like solar panels. So I think it's going to happen. I think we're going to see a move higher in copper and platinum. But doing a study on the past correlations and on the past lead lag indicators, that would be an interesting thing to do. David, please stop spamming, because we're gonna have to ban you. Copper does lag a little bit, yes, but put copper on silver chart, you'll see it on the last push. Let's see. So what we can do is we can go to silver, then we can click, let's do monthly or weekly. Let's do weekly. Plus, let's do copper. And let's do same percentage scale. Okay, this is gonna be a bit rough, but oh, come on, you're not letting me expand. Yeah, we can't do much here, but I think it could be a nice edge. I mean, you can kind of see it. Like silver has gone parabolic. Can we? Nope. Huh? Nope. So silver has gone kind of parabolic, while copper has been starting to move higher. But I would say there is a bit of an edge there, and I'm definitely looking to play it. I think a lot of guys in the A1 Discord are looking for the same thing. By the way, if you want to get trade signals, all of my trades, Nick's trades, Chris Pulver, Iwind, Alan, if you want to get all of that, definitely consider clicking the link in the description and using the code Marco to get a pretty nice discount. I think we have a 40% discount running this month. So code Marco works for the A1 Trading Discord and works for getting the Edge Finder as well. Okay? So check it out. You would have gotten the Nick's latest trade on gold, which he's up, I think, $130,000, which is absolutely crazy. And you would have gotten my last signal, which is on the Nikkei. Not working so well, but still moving higher, so I can't complain. What else did I want to go through? The DAX. Looks like crap at the moment, so I'm glad I didn't get in. The DAX broke out, but could not commit. So not on my radar any longer. Dow Jones being flat. What about the Russell? Russell is staying pretty strong. So Russell is staying pretty strong, and that looks nice. I personally am not looking to play the Russell. I'm focusing on the NASDAQ as far as the US goes, but price action-wise, this looks okay. Bitcoin doesn't look good. Bitcoin crypto winter, if we can't go back above 100K, I don't think much is going to happen with Bitcoin. Bitcoin is no longer the cool coin. It's no longer used by people in the shadows and by criminals. I mean, it's still used by criminals, but it's now also used by the big institutions, big banks, big investment banks. Pretty much everyone that's in the financial markets now holds at least a little bit of Bitcoin. So it's no longer this cool thing, and the narrative behind it is not really bullish. The hype died down. The narrative right now is crypto is kind of in a crypto winter. So you're not getting those buyers. What is the use case of Bitcoin? That's also the question. So the use case of Bitcoin has changed from year to year. Right now, there is no specific use for Bitcoin except sending money without it being traced, tracked, controlled by, let's say, the central powers. I mean, the banks. So I think crypto is still a good play overall to go long. I think Bitcoin will absolutely go higher, but not at the moment. And I actually think we can go lower. We are also in the bearish part of the halving cycle. I would not be surprised if a big pullback happens. It happened before. Look at this one, massive pullback. Look at this one in 2018, massive pullback. I think this was 80% from the peak to the trough, 84%. That is nuts. So crypto, I don't see any potential here. If someone has a different opinion, different take, put it in the comments. Ethereum, yeah, looks horrible. TLT, or let's say US 10-year, not moving. Let's see, JP 30-year. What about the long end of the Japanese bond market? Not doing much. What about USD JPY? Pausing a bit. By the way, there was no intervention here. This was just weak hands. Turns out the BOJ did not even step in to sell the dollar yen or to sell US treasuries. And it was all just weak hands selling on rumors. The rumor was, or what happened is the Fed requested a rate check, meaning people were kind of expecting some sort of an intervention was going to happen. So they sold, weak hands sold, but the BOJ, at least by what we know, the BOJ has still not stepped in to sell this market. My opinion on this, I'm staying away from it. So the move that I was expecting happened, although it wasn't an intervention, but it still happened. And I don't really have an edge by buying or selling here. Last request for today before we wrap up. Let me see, what do I find interesting? Okay, I like this comment. Hey, Marco, how do I overcome my fear during a running trade after entering it? I would say you need a concrete plan. So what works for me is using a trailing stop loss with a fixed plan. So let's say I'm just going to move my stop loss as the price keeps going higher below the swing low. For example, my game plan says to me, well, quite a big move. If the Nikkei decides to go higher, I will just keep moving my stop loss below the swing lows on the daily chart. So I have a concrete exit plan out of this position. So before you take any position, if you have a fear of closing the trade prematurely, just write down exactly how you will exit the position. Is it a fixed take profit, or is it a trailing stop loss, or is it something else? Do you have a trigger that's going to make you exit? Is it a fundamental event? So plan ahead, put it on a piece of paper, and then stick to it. Having things written down, having a plan is the best way to avoid mistakes. Okay? And having the scenario playing out in your head also helps. That's about it. Thank you very much for watching. I will be live streaming tomorrow. You can find me, so you can find my schedule on the A1 live stream schedule, which tomorrow I'm on at 9 a.m. Eastern Standard Time. Good luck in the markets, and let's see if we can get some entries on my watch list. So good luck. See you in the next one. Goodbye.
Thanks again for watching today's show. Our goal at A1 Trading is to continue to share free value to our audience through daily videos and articles, keeping you up to date with the latest market coverage. If you enjoy our content, make sure to subscribe for more. From all of us at A1 Trading, have a great day, and we'll see you next time.